Hey Facebook, how are we doing today? It's another market day with me, your designated inquirer. My name's Axel, and it is 8/5/2020. Today the market went and got itself, just putting along. Overnight, it did establish a new high. This morning, it tried to test some levels that were kind of established again overnight. It did not break them. It's still somewhat keeping a generally uptrend. If we go to like a 2 hour time candle, etc., it's still moving somewhat upward. If we take a look at these particular candles right here, the trend, quote unquote, has been broken a little bit, but that's not a real major indicator of anything really, except for that it's it's broken something, but as to what, it's kind of hard to say still. It's still not breaking anything meaningfully to the downside yet, because it keeps establishing higher highs. It could be something like a long stretch like this, where day after day is basically still attaining higher highs without any true end in sight, but off of what, like, true indicator information. Like, there were earnings that for a chunk of companies showed positive earnings for the second quarter, where for many were really poor. Apart from what's going on in the few companies that reported well, there are the thousands of companies, small businesses, etc., that are basically going bankrupt as we speak. So Congress still hasn't passed anything yet. Come Friday will be the first true disruption to payments, etc. So I don't know if Congress is waiting for that information. I don't know if they're being that callous, but there's plenty of pain already going around, and it's probably going to be hitting the banks, etc., soon enough, or credit card companies. That sort of information where they're going to be able to tell, like, are people less prone to spend now since they're not getting that extra money? If like, I don't like, I hear some people say that the fundamentals are strong, but I don't know what fundamentals they're talking about, because if we're talking about in terms of the economic outlook, with so much unemployment still at levels that have not been seen since even before what they're calling the economic downturn, the global recession. This is going to be another global recession. If the US slows down, the world slows down. There's no questioning that. If we slow down, they slow down. Like, this was that slowdown. Like, we keep revisiting it, but like, this is 5%. This is 5% hit to GDP. That's what that looks like. This year, even by still somewhat non-updated models of economic growth for the year, we're still going to be at 9%. We're going to be at almost double the worst that this recession ever saw, and yet there was a correction of a substantial amount. Was it simply that the Fed there did not react as well or as quickly as the Fed did now? Is that really what all it was? I don't think so. We put in 2 tranches of $400 billion into the economy, in terms of payments. Like, we've been throwing a lot of money at this problem right now. But it hasn't really solved it. That's kind of the point. Like, the problem that was happening back here in terms of like who was going under, etc., we were able to keep the companies like AIG and a few and major like financial institutions like solvent. But there were still a lot of other companies and a lot of small businesses that went under, and there was still unemployment. Like, that's what this was. That's what this was a reflection of. This still happened. It still happened. It still happened here. Like, there was still that shock. We're still living with the unemployment, stuff like that, but somehow, because we were able to save the cruise lines and the airlines so far as we know, we're okay, and we're doing better than that. Like, let's, even if we're looking at the ES, which is a better representation of what the economy is doing, if we take a look at, we're nearly back at the levels we were back in March. This still doesn't make any sense. Like, I'm trying to rationalize it as best as I can as to like why this is the case. Even on a global stage, with China and Europe coming back into the fray, it's not American demand. It's not American consumers that are doing this. Like, to a certain extent they are, but like, they're having the rug pulled out from under them. There's still a lot of people that are unemployed. This hasn't been fixed yet. This is not fixed. We're not fixed. There's gonna be a lot of hurt for a lot of people for a lot of years, and yet there's this shows too many companies feeling all right with what's going on. That's what that means, and I don't know how these CEOs or whatnot, because they've gotten away with not being able to give forward projections as to what it can look like, which I think was a grave mistake for investors to accept on the part of CEOs, because they weren't essentially coloring in. If we're taking a look at the possibility curves in terms like to the positive and to the negative, they haven't been properly coloring in what the worst case scenario could be for their companies, and not issuing projections and not issuing estimates from the companies themselves, with only the analysts being able to say what they are doing or what they're not doing. Has let everybody essentially see the world through what seems like rose-colored glasses, because the upgrades still don't stop. And upgrades on what economic indicators are they upgrading people on? I feel like that's like now a dereliction of duty from the part of the analysts and the people that are grading these companies. It doesn't make any sense. And Kramer could, yell at us all he wants as to like, why do we keep saying that the stock market or the market doesn't make any sense? That's why I say that it doesn't make any sense, because these analysts are incessantly upgrading these stocks, raising their price targets for all of these companies, and it still doesn't make any sense. Like, I wish it did. Like, I heard on, it's not, this is knowable information that heard on through NPR that credit card companies are now starting to raise the requirements for borrowing money for simple credit. Not we're not even talking about like being able to borrow for a house. Like, why would they start to modify what it takes to borrow for simple credit for everyday purchases if they haven't already seen a propensity for people to stop paying that. They haven't started to see a negative return where they have to now start to filter harder for better borrowers. If they don't see that sort of information, there would be zero incentive for them to filter consumers for better borrowers. That's what increasing your requirements for borrowing money is. You're filtering the consumer, your possible consumers, for the best in class of borrower, so that you have a higher propensity to try and get your money back and make that percentage. Like, if you're increasing the requirements for that to be the case, then you believe that the current crop of consumers is not up to the standard that would produce a good enough return. That's what that means. And I'm surprised that nobody else is seeing that. That's what it means to me. That's the lenses at which I'm looking through the world. And that's why, Kramer, I do not agree with you that it makes perfect sense to be questioning this market right now. And he's gone to the lengths of calling certain types of investors clueless, just jubilant, and letting themselves be victim to animal instincts, and being quote unquote stupidly bullish. But and so he's joined the ranks of questioning the market. He's joined the ranks of questioning the market. The most bullish man that I've seen on television like these past few weeks has now started to join the ranks of those that believe that the market is kind of acting a little bit insane here. I don't know how much longer this is gonna last. But if you guys are in the market, just be careful. Just be careful. Have your stops in. Make sure that if you've had a good run, if you've made your money, take those profits. Read that cash register, because Kramer's not a dumb man either. Because bears can make money, bulls can make money, pigs will get slaughtered. If you stay in for too long, you don't make your profit, you're gonna get hurt. So just be careful. Apart from that, I don't really have anything other to add, because there's still no deal for a stimulus package. The White House is contemplating making unilateral moves somehow, which I don't really know how, because all of that is a dollar amount that has to be approved by Congress. It's all very, it's all very befuddling. So, yep. We'll see what happens tomorrow. We do have unemployment data, raw unemployment data, not necessarily ADP payroll numbers. Not. It's going to be a better read on what jobless numbers actually look like, unemployment claims, etc. Today's pseudo number that we got was somewhat of an indicator that it's not looking too pretty as far as the service sector, because instead of adding 1.4 million, we actually only added 168,000. That's only, we came in wrong. Basically, we got an F. We came only at 10% of what the estimate was. I don't know how the market decides to take that number and decides to run with it. It doesn't, it's still not making any sense. Anyway, that's where we're at right now. We just got a spike right here off of what information, I don't know, because we still don't have a deal. I'm trying to look at the information here. There's some GOP senators that want to extend $600 a week, but We'll see. Anyway, that's the update I have for you right now. That's information that I'm seeing come across the board. And yeah, until tomorrow. Hope you guys stay safe. Hope you guys stay healthy. Take care.